Hi everybody, this is Lara with your weekly video for gold for the week ending Friday 12th of May 2023. The preferred Elliott wave count does remain bearish, but if your own analysis is bullish, then use the bullish Elliott wave count as your roadmap. For the bullish scenario, I provide a main and an alternate. Within the bear market, primary wave 2 could be over at last week's high. The next midterm target is 1331. The next target at cycle degree 1037 and the final target at super cycle degree 657. I will discard the bearish count if price makes a new high above 2070.48. If that happens, then the long-term target would be 2526. This is the preferred Elliott wave count. It is bearish. It sees a huge grand super cycle degree fourth wave unfolding as an expanded flat. Expanded flats are common structures, particularly in B wave and fourth wave positions. Within the expanded flat, here is the end of supercycle wave B. It subdivides as a double zigzag. When B ends, C begins. Supercycle C may only subdivide as a five-wave motive structure. There are only two of those, impulses or diagonals. Ending diagonals require all subwaves, cycle 1, 2, 3, 4 and 5, to be zigzags. So if cycle 1 is correctly labelled as a motive structure, that means supercycle C is not unfolding as an ending diagonal, it's unfolding as a more common impulse. With cycle wave 1, a complete leading expanding diagonal. Cycle 2, a very deep zigzag. It's really common for second waves following first wave leading diagonals to be particularly deep, so this part of the wave count follows common behaviour. Cycle wave 3 may have begun here with primary 1 over here and primary 2, a very, very deep double zigzag. It's actually pretty normal for gold early on in a new trend to have really, really deep second wave corrections. So this does also follow common behaviour. It's a very difficult behaviour to hold through. If your wave count is correct, they will convince you or try and convince you that your wave count is wrong, and they'll do it right before a third wave takes off in the opposite direction. So if this wave count is right, it is following common behaviour for this market. It could be wrong, and I do have a bullish alternate for you. If this wave count is right, then a primary degree third wave within a cycle degree third wave is in its earliest days. A reasonable target for primary 3 would for it to reach 1.618, the length of primary 1, at 1331, and a reasonable target for cycle 3 would be for it to reach 2.618, the length of cycle 1, at 1037. This target would probably be some years away. The final target for supercycle wave C is for it to reach 1.618, the length of supercycle A, at 657. That would see supercycle C move below the end of supercycle A at 1046.27. That's the low, the really big low in December 2015. It's extremely likely, if an expanded flat is unfolding, that C will move at least somewhat, if not substantially, below A to avoid a truncation and a very rare running flat. If primary 2 were to continue any further, it may not move beyond the start of 1 above 2065.89. That invalidation point for this wave count on the weekly chart is absolute, but I do have an alternate wave count that has the invalidation point back here. It could be that a triple top is forming. Let's have a look at the daily chart. We're looking at the end of primary 2 from the high of intermediate wave W, the first zigzag in the double, which is this point here. The double is joined by a 3 in the opposite direction labelled X, and the second zigzag in the double, A, B, C, could have been over up here. Primary wave 3 may only subdivide as an impulse. That will be labelled intermediate 1, 2, 3, 4, 5. Intermediate 1 must subdivide as a 5-wave motive structure. That will be labelled minor 1, 2, 3, 4, 5. Minor 1 must subdivide as a 5-wave motive structure. That will be labelled minute 1, 2, 3, 4, 5. Minute 1 and 2 could be over. This wave count expects a third wave down at a low degree within a first wave to start to move price lower with a little bit more, a little increase in range and possibly an increase in volume, although not necessary for a downward movement. On the weekly chart, this wave count is identical to my first wave count to this low here, and then instead of cycle 2 being over here, if we move this zigzag down 1 degree, this could be just wave A within a flat correction for cycle 2. Cycle 2 could be continuing A, B, C. C, for this wave count, would be extremely likely to move at least slightly beyond the end of A, or at least meet the end of A, to avoid a truncation and an extremely rare running flat, but cycle 2 may not move beyond the start of 1 above 2070.48. This invalidation point is absolute. A fraction of a cent on a tick chart will invalidate this wave count, and then I will finally forever discard the bearish wave count. I won't try and rework it if that happens. But while price remains below this point and has not breached the invalidation point, this is still my preferred wave count. This wave count, though, has a pretty low probability, this alternate. The main weekly chart has a better probability. This wave count requires a little bit more upward movement to end in a really small range, under just over $4.50 something, above this high, but not above this high. That's extremely specific. But this wave count does have a good fit, and it does meet all Elliott wave rules. This wave count sees a bull market continuing. From the low in December 2015, supercycle wave 1 begins. Within it, here's the end of 3, and 4 and 5 is unfolding. That'll be labelled primary 1, 2, 3, 4, 5. Primary 1 incomplete, with intermediate 1 possibly over here, and then intermediate 2 an expanded flat A, B, C. B is a 1.66 length of A. That's longer than the common range of up to 1.38, but still within an allowable limit of up to 2. C would be likely to move substantially below the end of A. That's normal for an expanded flat. And 2, if it got that deep, should find support at the lower edge of the Elliott channel. 2 may not move beyond the start of 1 below 1616.14, a new low by any amount at any time frame. Below this invalidation point would see the bullish wave count discarded and a high confidence, a substantial confidence in the bearish wave count at that stage. The target here is for cycle 5 to reach equality in length with cycle 3 at 2526. Cycle 1 was very short, cycle 3 was extended. If cycle 5 were to reach only equality with 1, it would be truncated. So the next likely scenario, equality with 3, is used to calculate the target. On the daily chart, we're looking at intermediate 2 expanded flat, minor A, minor B, minor C. Minor A is zigzag, minor B is zigzag, minor C must subdivide as a 5-wave motive structure and would be likely to move below A. If intermediate 2 finds support at the 0.618 Fibonacci ratio of intermediate 1 at 1747.05, then that would see minor C move reasonably below the end of A, and the expanded flat would have a fairly normal look. On the daily chart, if we move the degree of labelling here up 1 degree, intermediate 2 could be over, but this looks too brief and shallow. That's why this is an alternate for the bullish wave count. But let's consider an alternate for this scenario. If 2 is over there, 3 has begun, minor 1 could be over here, minor 2 could be unfolding as an expanded flat, A, B, C, C to move below the end of A, the target for support here, the 0.382 Fibonacci ratio of minor 1 at 1955.41. The target for intermediate 3 here is for it to reach 1.618, the length of intermediate 1 at 2362. Minor 2 may not move beyond the start of 1 below 1807.12. On the weekly chart, last week completed with a strong bearish upper wick. This week looks like it's completing as a shooting star candlestick pattern. There's a shooting star back here, so now we've got these bearish upper wicks together, adding quite a strong warning that we could have a high in place up here. On the weekly time frame, the upward trend is still indicated and it hasn't reached extreme. RSI just barely reached into overbought, but money flow reached fairly overbought and has exhibited double bearish divergence with price. And I've checked price on a closing basis, but I draw the lines across the highs. But just so you know, I do check price on the closing basis with the corresponding points on money flow. So with double bearish divergence and these bearish wicks and bearish candlestick patterns turning up, let's expect at least a pullback to support at 1915, if not a major trend change. On balance, volume is at resistance, no signal this week. ADX still indicating an upward trend. It's not yet extreme, but it is getting closer. RSI neutral, money flow neutral, stochastics neutral, ATR showing a recent increase as price moved higher. On the daily chart, we have a strong bearish engulfing candlestick pattern at the high as well. That was last week's bearish engulfing pattern, and a spinning top. The bearish engulfing pattern fully engulfs this and almost fully engulfs this previous candlestick. Now, for the last couple of sessions, volume is actively pushing price lower. This is Thursday. We don't have Friday here because I'm preparing this just a little bit before New York closes, but if Friday's data changes the analysis, then I will provide a chart if necessary and a comment in comments underneath this analysis for you. On balance, volume has no new range on the weekly chart. ADX is indicating an upward trend. It's a long way to go before it gets extreme, but there is double bearish divergence between price and RSI after RSI reached overbought, and triple bearish divergence now between price and money flow after money flow reached overbought. Given that bearish volume and bearish candlestick patterns, it is questionable if this upward trend can continue much longer. ATR increasing as price moves higher, now showing a little bit of a decline as price moves sideways and a little bit lower. That's it from me with your gold update this week. I hope everyone's looking forward to an awesome weekend.